Today, Amazon founder Jeff Bezos blasted to the edge of space on a rocket he owns. He and three others enjoyed a few minutes of weightlessness before the automated rocket landed in West Texas, and the whole thing took a little over 10 minutes.
All right, whether it was the free publicity or relief from having the executive chairman of the board safely back on Earth, Amazon stock marked some modest gains today. It was up a little over 0.5% when markets closed.
Now, you dig deeper, that looks a little tame compared to some of the less obvious choices. GameStop stock up more than 10% today. AMC Entertainment up nearly 25%. And what those stocks share is a devoted following of online fans, and some at-home stock traders had major gains this year.
Denver 7's Russell Haythorne takes a 360 look at retail trading, how it's shaking up the market, and what the future holds for meme stocks and app-based buying services.
Sitting behind a bank of computer screens,
I'll watch a couple things throughout the day.
In the basement of his Highlands Ranch home,
I just happen to learn financial exchange through my work.
Justin Martiniak has amassed a small fortune during COVID lockdowns.
35 grand investment. At one point, I think it was up $100,000, which is crazy to think about.
He bought GameStop early in its rise.
It was $4, slowly grew to $10, started to pay a little attention to it. $40, that's when I started to buy it. At that point, you're so far up, it's like, what do I do now? Like, I've never been in a position like this.
Justin is part of a growing trend of meme stock retail traders using apps like Robinhood to buy and trade stocks instantly. Typically, young traders who buy and trade stocks based on behaviors and emotions rather than traditionally gauging a company's performance.
Bull markets make people geniuses. But the question is it enduring?
We're going 360. Is this smart investing or glorified gambling? Are apps like Robinhood completely changing the game? How is this impacting traditional investing? And what's the difference between meme stocks and blue chips? Let's start there.
We are seeing a phenomenon that I have never seen.
GameStop,
AMC, Bed Bath & Beyond.
AMC, for example, closed up 95%.
Meme stocks see dramatic price increases, not fueled by a company's performance, but rather...
And I have to eat a ghost pepper because I said that if GME hit 200, I would eat one.
People on social media. Primarily Reddit, Twitter, and TikTok. Such was the case with GameStop. The company was failing. Hedge funds were shorting the stock. And a page on Reddit called Wall Street Bets sent the stock soaring into outer space earlier this year by creating an army of retail traders like Justin who gobbled up the once worthless stock.
The tip-off was probably Wall Street Bets and just sentiment. It's life-changing.
Justin gambled, and it paid off. Big time.
Yeah, man, I almost had a little cry in the shower when I was up 100,000.
But there are just as many losers as winners.
Investing is not about psychology and trying to predict other people's short-term behaviors. Investing is about trying to predict where this business is heading.
Adam Shore is a professor at MSU Denver and president of NZS Capital, a Denver-based investment firm that started in January 2020 and now has $1.2 billion in assets.
In my view, if you're invested in GameStop, you're investing in trying to predict when a panic occurs.
He sees meme stocks as gambling, plain and simple.
There's people who are going to hit 12 red up in the casino, but it's what you do with your next round.
Catching lightning in a bottle once is one thing. Adam says doing it twice, good luck.
Risky business.
Perhaps that's true, but Justin points out what he did is no different than what day traders are doing every day on the floor of the stock exchange.
They're just people like me and you. They just wear a suit when they do what I do. Yes, there's risk involved, but it's not like a lottery ticket.
What's perhaps riskier is what some hedge funds did. They were shorting GameStop, thinking it would lose value.
You're selling something that you hope to buy back later at a lower price. If I borrowed your car and sold it to a friend of mine, in 3 months when you want your car back, I better hope I can get that car, and if I'm smart, I'll get it back cheaper.
That panic put some hedge funds out of business, while GameStop gained tons of value thanks to Wall Street Bets. What Adam and Justin do agree on is that apps like Robinhood are giving more and more rookie investors a platform.
I think it's great that there's more access to the markets for more people.
It made me aware that I didn't need some super knowledge for this.
They also both believe if and when you do hit a windfall, you should go back to basics and put your money in more sustainable long-term investments. In other words, Do what your dad's been doing for years.
My current philosophy right now is very diversified stock picks. The best thing to do is to just put it into an ETF like Vanguard.
There's always going to be random events, but you need to have a portfolio that can withstand random events.
As for Justin's stock in GameStop,
I sold it all.
he's now planning his next move.
Like I always thought it would be great to get a tax refund. Not really. You want to be paying them because you're making so much extra money.
And for the first time in 35 years, he sees his dream of retirement as a reality.
The whole reason of doing this is I want to retire early. I don't want to keep working for making someone else money.
Russell Haythorne,
I want to be on a beach in Hawaii.
Denver 7.
And now we want your perspective. Is retail trading the future of stocks, or is it glorified gambling? Email your thoughts to 360@thedenverchannel.com.